Hello, viewers. Welcome to BQ Prime. This is your host, Rishabh Bhatnagar. And today on Startup Street, we have Fresh2Home, Fresh2Home CEO and co-founder Shan Kadavil with us. Welcome, Shan, to BQ Prime.
Hi, Rishabh. Thank you. Thank you for having me here.
All right. Why he is here today is because Fresh2Home has today closed a $104 million Series D round, and it has entered the Unicorn Club. But Chan, I see that you are addressing yourself as a Proficon. So could you elaborate a bit on that for our viewers?
Yeah, I don't want to comment on valuations, but in general, I think the North Star metric for companies is profitability, right? And what we've really achieved is full operational profitability, and this is really a key achievement and one that we are really proud of. So when we started the business, we understood that there is an unmet need both for the consumer as well as the producer, and we've built a great brand. The FreshToHome brand is now really well known, and it is a brand that stands for no chemicals, preservative free, and also no antibiotics or any other kind of chemicals whatsoever. To do this, we had to go all the way down to the fishermen and farmers because that's the primary products that we were selling. And it took a while, and it was rather hard work to build that kind of a barrier to entry or a moat, right? We had to go down to the fishermen and farmers, do this directly. My co-founder, and we have 8 co-founders. One of my co-founders is Matthew, who's a fish exporter. So we watched how he was able to build that business, and then we replicated it using technology. So we've got AI-based algorithm that allows us to auction the produce from thousands of these fishermen, right? So about 3,000 of fishermen across 300 to 400 harbors in India, and then sell them directly to the consumers while cutting off the middleman. Now, just going back to your earlier point on Proficon, is really that to be a Proficon, you need something that is an unfair advantage, right? Something that's an unmet need has been solved, but you also need an unfair advantage, which is a barrier to entry. So for us, that unfair advantage is giving better price to fishermen and farmers and also to our consumers. But at the same time, operating the product portfolio with a 40% gross margin. So, right. And that is really what is required to drive sort of operational profitability, which is really what we have achieved. So we prefer to be called as a Proficon. That's really the area that we are focused on. And I'm also seeing that the stakeholders, including investors, are really appreciating that as the end, because that's really the end goal and end destination, and that's really where we are at.
Right. So that's a profitability at the EBITDA level, correct?
We're talking about profitability at the operational margin level. Below this, you have the management cost, which has not been considered in, and the other overheads and so on. But at an operational level, we are fully profitable at this point.
Got it. All right. So Shan, with this round, Amazon has entered the cap table through their India-focused venture fund. Is that correct?
Yeah, Amazon is the lead investor for our current round.
So what are the synergies that you see there? I mean, with Amazon coming on as an investor?
With the current round, it's a financial partnership. That's the primary focus. But Amazon is an amazing partner to have, right? And it's a company that has really exemplified, consumer excellence, and we are really learning from them. Currently, the partnership is largely financial, and that's the focus area. And Amazon coming in is really a testament to the consumer brand we've built, that and also the producer value, right? The fishermen and farmers and the vertical integration that we do. And Amazon, because of there's really a gold standard as an investor, and they've done their diligence and they've gone through that entire process, and they've really understood the metal. At this point, it is really a financial partnership, and that's really the primary underpinnings of the deal.
Understood. Shan, could you also elaborate on how these funds will be deployed?
So we have 3 key uses of funds, right? So one is we are seeing tremendous amount of growth, and we've seen almost 10 times growth in the last 3 years. Now, with really full focus on sustainability at a much larger base of revenues, we are now growing at 40-50% year on year. And we've launched in 160 cities, of which about 100 of these cities were new in the last 18 months or so. A key use of capital is now to grow in these newer cities that we've launched. That's a key use of capital. Additionally, beyond that, we are also now focused on figuring out international markets. So UAE has been a really successful market for us. We are now looking at alternate markets like Saudi and others. So the moat that FreshToHome has built is really around the sourcing and the brand, right? And these are really powerful moats. And if you look at fish in particular or other meat, about 80 to 90% of the produce in GCC is actually imported, and India is a large exporter. So as a result, what is applicable as an unfair advantage to us in India is equally applicable in these regions. So that's another area of expansion opportunity for us, and that's one use of capital. And additionally, last but not the least, a big use of capital would also be to enter omni-channel. We've recently, in the last sort of 12 months or so, we've ramped up about 30 stores on our platform in Bangalore. And what we're seeing is very interesting, right? What we're seeing is there is a huge pattern of consumers who are first buying it offline and then moving online. That's an interesting and very encouraging habit, because if you look at the cost of any D2C business, it's really the cost of acquiring users. And with these stores, we're seeing about 20% of our new users in Bangalore are now coming from these stores. And so that's really a playbook for us to replicate for the future, where we will be present both offline and then also come online. So we'll be an omni-channel brand that gives consumers antibiotic-free and residue-free and preservative-free products direct from the fishermen and farmers. But at the same time, making sure there's enough value creation for all stakeholders in the ecosystem with this approach.
Super. Will you also be looking at any inorganic growth opportunities, in effect, any acquisitions in the pipeline?
It's very hard to predict M&As and acquisitions, so it'll be opportunistic. We're always in the mode. We've been growing constantly. We've been hiring. We've been looking at both talent pool from both business standpoint, talent standpoint, and so on. So we'll always keep our eyes open, but it's hard to predict that because it can't be a planned activity.
Okay. One last question, Shan. You already have a large and well-funded competitor in Licious.
Sure.
So what's the sort of, how do you see this competition playing out, say, in the next 5 years? What sort of market share or what sort of competition do you see there?
So the category is quite large, right? So if you look at it, it's not really FreshToHome, Licious, or others, right? So if you look at, so my personal estimate would be that we're talking about a category where the organized players, including FreshToHome, Licious, the horizontal supermarkets, all put together would be in the 700 to 800 sort of $1 million range. The market size could be in the $50 billion range. Of course, a large part of this is really today offline, right? So about greater than 99% would be offline. So really the challenge and opportunity for all online brands or omni-channel brands is really to figure out how to transition that user base, which is really what we are focused on, right? We are really focused on building a profitable company. We are really focused on figuring out the best use case for our consumers, which is antibiotic-free or preservative-free products, and then expanding our user base. That's really our focus today. We don't focus or obsess about competition because it's such a large category that there is enough room for growth.
Right. All right, Shan. Thanks for coming on Startup Street. Thanks for coming on BQ Prime.
Thank you.